He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
And we're back.
We're back.
It's Ron and Jan, but big announcement with Jan. It's going to be off.
I'm going on my honeymoon.
Congrats.
Thank you.
Jan got married a while back. She was off for that.
A few months.
Were you off for what, a week? Not even a week, a few days.
For when?
Your wedding?
I was off for like 2-3 days.
Yeah, it was nothing.
Yeah.
And now you're going, tell us where you're going.
I'm going to Europe.
Fantastic.
I'm going to 6 different countries in, I think, 16 or 17 days. Wow. So it's like every 3 days I'm on a flight, basically. Oh. But yeah, it's exciting. I'm going to spend a lot.
Where are you going to go? Tell us where you're going to go.
Oof. Okay. I go straight to Greece, in Athens, and
Beautiful.
I'm going to Rome, Malta, Paris, England, and then Scotland.
Paris. Wow. You excited?
12 hours in Paris. I refused. Yeah, I refused to stay there because I was reading the reviews of the Airbnbs and they're like $400 or $500 a night. And it's like people said they had bed bugs. So I was like, I'm good.
You're just going to run around Paris.
We're going to run around Paris and then catch a train to London.
Oh, you're going to go through the Channel.
I am.
Congratulations.
Yeah.
I would love to do that.
I'm trying to do the full experience.
That would be a great experience, actually, because you get to see all the French countryside, then you get to see some British countryside, and you can say for the rest of your life, you've been under the English Channel.
Exactly.
Fantastic.
Yeah, it's an experience.
So then London, how many, you get 12 hours in London? Or?
No. My sister lives there. So
okay, great.
I'm staying there. I'm staying there for like 4 or 5 days. And then we're going to do a trip to Scotland.
Well, you take the train or what are you doing?
No, we're going to fly to Scotland. I'm flying everywhere because it's just easier.
It's cheap there, right?
Oh my gosh. My flight from Athens to Rome was like $30 Canadian. No
Come
baggage.
off it.
No
Come
baggage.
off it.
Because I'm going during off-peak season.
Yeah.
So, yeah.
Jesus.
And I'm the ultimate travel planner. Like, I plan my whole wedding by myself. I am the planner. So, yeah.
Oh my God, it sounds like it's going to be fantastic.
Yeah,
Good for
excited.
you. So, folks, we're going to have some guests in. No one could replace Jan.
Of course not.
But we are going to have guests in for the next 3 weeks. Well, Jan we're in a whirlwind tour of Europe.
Yeah.
Good for you. Enjoy yourself. All right. So lots of stuff to cover this week. We talked briefly. We've been covering it in other kinds of social media. We've been covering it on our YouTube 6-minute broadcasts. And we call it a channel. I got to quit calling that broadcast. It's like I'm an old fart. Okay. Like
you were on the Zoomer.
What the fuck? Yeah, I was on the Zoomer, guys. I mean, can you imagine? Everybody's shaking their heads. What the fuck is he talking
I did
about?
not know the Zoomer was, what is it, like a TV show just for people over the age of
It's
55,
a channel.
65?
It's a channel.
Yeah.
Okay. It's Vision, and the Zoomer show is meant for people over the age of 65, which I am. Okay. But I mean, it's really over the age of 65. I mean, it's
That's sweet though. I think that's sweet.
And hey, listen, look, I gotta tell everybody this right now. Moses Seimer, who is the founder of the thing, it's a good thing. Okay, so it's really cool. They bring in a small audience of like 24 people, 24 people, and they come and they watch the taping of the show, and like they're retired, right?
Yeah,
so it's like it's like a great outing. It's a great event for them. They watch the taping of a show. It's like a panel discussion of how to do financial stuff, and then they feed them lunch.
Oh,
they go for lunch and they come back and watch another show. Okay.
That's
so
cute.
like it's a big day for people.
Yeah.
Like, and they're they're definitely not young.
Yeah.
Okay? They're not young at all, but it's charming and it's great.
Yeah.
And I appreciated being on the show.
That's nice.
There's some older folks though, for sure. I mean, I'm old, but it
looks like they know their demographic.
They know their demo. They know their demo for sure. Anyway, it was great. But we talked off and all of our other stuff that we put out. I've talked a lot about the new government change to do this refinance of essentially a rental. Like it's designed to take your owner-occupied home through the government program CMHC and pump it up to get busy and add a suite on top of your garage, put in a basement suite, put in another suite. I think you can go to 4 units total on the program. By the way, we don't have all the details of the program yet. The really nuts and bolts is still coming. But the idea is that you could go up to a $2 million value, get a refinance at 90% at low rates with 30-year amortization, and you'd end up with a $2 million rental project. Okay. Now, again, the rules are you have to live there. The owner-occupant has to be there in the place. But sure enough, we got the TikTok realtors. We got the Instagram real estate agents. We got reels and reels of realtors who are putting it in a slightly different light. Okay, the realtors are saying, I'm watching one, and he's walking past this house. He says, look at this old place. And, you know, could be great potential. We're right downtown in a small lot. But look, there's a garage here. You could put a unit on top of that garage, and you could rent that out for $2,800 a month. Look over here. You could have a big basement suite in this old rundown house. You could upgrade this to a big basement. You're going to get $2,300 a month. And on the main level, you can get $3,500 a month on the main level. Fix it up. So I'm thinking to myself, you are violating the rules of this thing completely. You are completely violating it. And he's saying, hey, you can get 30-year, and by the way, you can get refinanced to 90% up to $2 million. Wait a minute, dude. It's not a rental project. You're supposed to live there. Like, that's the rules of the program. But as has been known to happen, realtors have taken a whole different view of this. Now, let's be clear. We don't know all the rules yet. We don't know the absolute every single requirement. It's definitely meant for people to add to a home they live in, to a home they own already. Appears to be what it is. That up to 4 units, but more realistically, one or 2 extra units. It doesn't mean that they all have to go to $2 million. I mean, but obviously that's available as a limit. Now, you still have to meet income ratios. So you probably need about close to $400,000 to be able to go to that $2 million number. Okay. Get a huge, massive $1.8 million mortgage. And that's not a lot of people, but it does bring up a very important point. If we're going to have $2 million government-backed mortgages, or 1.8 plus 90, 1.8, nearly $1.9 million, because when you got the 1.8, you got to add the insurance premium to it, right? Yeah. So you're probably looking at $90,000 of insurance premium. So the whole loan, when it's finished, will be almost $1.9 million. It's huge, right?
And the purpose of this is to help with the housing crisis.
Well, that's the idea. But like as you often say, how does that get me closer to owning?
That's what I was going to get to. Like, I understand that it can, provide more income for homeowners already. Sure, great.
And more units for renters.
Which is great. But first of all, that responsibility on more housing in Canada shouldn't be on homeowners. Should be on the Canadian governments. Second of all, isn't that just going to raise the prices of homes? So then now, isn't that going to hike pricing if a lot of people are just reno their homes and they just have 4 units now? Like how is this help? Like, it's helping like a today situation to house more people, but how is this a long-term thing?
How is it a long-term assistance to people just trying to get in the market? Because to your point, this is what we know. We know from the most simplistic economics, and we've watched it happen. Boy, did we watch it happen. We watched it happen in 2021 when you could get a mortgage for 1.49, 1.99, and that means for pretty goddamn low payments, okay?
Yeah.
And the real estate market went nuts. The prices shot through the roof, okay? Because every economist, you go to, by the time you're finished the first year of economics in university, you will have heard many, many times that if you make something more affordable that people want by lowering the payments, the highest likelihood is you will increase demand. And if you increase demand,
Less supply.
because there's screw all supply coming, that's for sure. And this housing market,
Yeah.
supply is falling off a cliff. Remember all the government's promising you 3.5 million homes, 1.7 million homes, 4 million homes. No. Supply is just falling through the floor.
Yeah.
Okay. So to your point, if supply is screwed and we're going to keep stoking demand through programs to, refinance your house into a rental empire, okay, that's going to push prices.
Yeah.
Again, this is not just me dreaming this up. You can talk to any economist you like. Yeah, if you have very low supply is not keeping up, so that's a low supply environment where you make it easier to pay for something that people want that has a low supply. That's demand stimulus, and that's price stimulus.
Yep.
Right? I mean, this is not hard to understand at all. Nope. Okay. Sure, there's going to be maybe more units. I mean, the finance minister, Krista Freeland, went on and on about density, gentle density. She kept on saying gentle density. That there's
nothing gentle about this density right now.
No, there's not when the rents are this high. Although rents have come off.
They have, but how many people have a roommate? Like, how many people do you know that actually live on their own and they're like, yeah, I'm comfortable? Very few.
Wow, that's
and
a great
the people that I
observation.
do know that live on their own, they're hustling. They're not just doing their 9 to 5 and they can pay everything fine. So it's not realistic for long term.
That's a great observation. Yeah. How many people do you really know with one 40-hour-a-week job comfortably living on their own?
And have a significant savings, a significant,
living the life.
Like just okay. Just, comfortable.
Yep.
I'm sure, like I know people who are doing it, but do they have a savings account that says, yeah, they're going to buy their first home in the next 5-10 years? Definitely not.
Yep. Or do they have 3 jobs?
Yeah.
You're 100% correct. That is exactly how it's going. So, hey, TikTok realtors, Instagram real estate agents, reels and reels of stories about building a 3-plex, 4-unit, whatever the hell, rental empire. Okay. Stop it. Just fucking stop it, please. Jesus, it's against the rules. You know the rules. You're supposed to own or occupy one of the units. But I got a feeling that is not on your dance card of your TikTok story. Okay.
I get it though. Sales have been slow. They feel like it's their sales tactic in a sense where they got to do what they got to do to try to, push the market to want to make these purchases again. Right. But
Jesus. Yeah.
It is tough. It is tough for sure.
And look, it's definitely against the rules if you encourage someone to say, well, we just wait till you close, then you can move out and move in another renter. But finally, my greatest fear, as I've repeated so many times, is if we don't fix mortgage document fraud, if we don't fix that income document fraud, and we're going to increase the government-sponsored program to $1.9 million of lending, we're crazy.
Yeah.
Okay. like we are absolutely crazy.
Yeah.
Because I think, once you put a little salt and pepper on these TikTok realtor story, it's going to be, well, we'll do one. We'll give you, and then we'll do another one. Because with a little help from our friends, we can make infinite income for you or your spouse or your family member or whoever. Like,
they can spice things up.
Look, let's just be clear on this, folks. Most people are just fine. 95% of people are absolutely normal people. Okay, don't want to do anything wrong. Don't want to break rules. Don't want to do fraud. Don't want to do any of that stuff. Don't want to take ridiculous risks with their lives. Okay, by building a empire of real estate based on CMHC 90% refi. Okay, but if we know that some might, if we know that a small group are interested, at least fix the fraud problem for the love of God. Let's do that, please. Okay, let's fix this. If we can get this whole vast number of programs, we've had like 5 different programs roll out in the last less than 6 months. They're all going to be in effect by January 15th. Every one of the programs is scheduled to be in effect.
Yeah.
And by the way, when you talk to the government, they say, no, we'll be on time. Everything will be good to go. Okay. Well, if you can do that in 5 months, can't you fix the fucking income document fraud you've been known about for 15 years?
Yeah.
Like, can we not just do that at the same time? Please, Jesus.
Yeah.
Can we do that, please? Let's do that. So I had an interesting experience. We were talking before we started the show. I talk to a lot of people. I talk to you guys in the office all the time. And most of the people are under 30. A lot of people under 30, under 35 for sure. And some are just recent homeowners. Many are not. Many would like to become homeowners.
Yeah.
And that's who I talk to. And we relentlessly talk about how hard it is to get into the market, how crazy expensive house prices are in most of Southern Ontario. British Columbia, too. Very expensive. Alberta, by the way, Calgary's fighting to try to be too expensive. I mean, the prices just keep going up and up. But look, that's who I talk to a lot. And I talk to people my own age. That's just the way life is, right?
Yeah.
Like when you are 65, you talk to people who are 65, right? It's as simple as that. I don't talk much to people like in their mid 40s. Okay. Like that's not people. Sure. We get customers call, clients call. Some of them are that age. They're involved in some sort of refinance thing, but we don't just talk casually. Like we don't just talk, about
get to know them. And
we try to get to know as well as possible, but at the end of the day, they have a transaction they want to do, and we want to execute on that transaction.
Not taking them out to lunch.
Not taking them out to lunch, no. Okay, and we're not having casual conversations if we're getting a coffee in the office, right? So I had to, though. Like this week, I was sitting for a while with a few people who were 45. Okay. It just happened as a coincidence. As I'm talking to these 45-year-old people, I made a discovery. Well, they're between 40 and 45.
Okay.
I made a discovery. They had bought homes within the last 5 to 7 years.
Okay, nice.
And we think about the boomers who did so well, like they traded 100 quarts of strawberry for a house back in 69 or something. I don't know. Let's face it, folks. Houses were pretty fucking cheap in 1960s and 70s.
I can hear someone saying, but the interest rate was 19%.
And you can, and by the way, that person who's saying that right now, you can continue to fuck yourself. Okay?
Probably sitting at home mortgage free anyways. So.
You are sitting at home mortgage free, telling everybody how hard a time you had. And by the way, sure, you thought it was hard. Yes, I agree. Everybody thinks it's hard when they're in the middle of it. But there's a big difference between hard, but you did it. Because the house was only 109,000.
You still had the possibility too, yeah.
And you it was hard. You found it was hard, but you struggled through and you did it. And somebody today who's looking at a house that's 12 times their family income, and saying, "Guess I'm fucked."
Yeah.
Okay.
We don't even get the chance to struggle.
I'm willing to struggle. I don't know how.
Yeah, exactly.
Okay. So I think it's beyond struggle.
Yeah.
So talking to these folks who've bought in the last 5 to 7 years. And the first thing they say is, these prices better not come down. Oh. I don't want to see these prices come down at all. I don't want to see these house values come off. I said, okay. But, if you bought 7 years ago, you've done okay.
Price.
You've done,
Okay.
Yeah, I know I did, but, I had to come up with that down payment with maybe a little help from my mom and dad, but I had to come up with it. And that's part of my financial plan. And I don't want to see that value go down. I said, really? I mean, like, and then the man said it. Sorry, the lady said it. Then the man said it. Then another man said it. They're all in the same thing.
The same boat. Okay.
And they're people who make okay money too, by the way.
Okay, so then when your kids are living with you until they're 50 because they couldn't buy a home, then you can't complain because you wanted these prices.
And but here's the deal. People, we keep talking. People talk about always about. I talk about cognitive biases. There's recency bias. There's confirmation bias.
Right.
So if your experience are that you have 2 small children or 1 small child, and you're in this house and you're working hard and you're looking after the child or the children, and you are making a mortgage payment, for sure you are, okay? and you're in your early 40s, and you don't think about these kids, your kids, who are just small, 5, 8, whatever, 3, 6, who knows. You don't picture them in their 50s, right? I mean, like
That's so far-fetched.
You just think to yourself, I'd like to get a bigger house with a bigger yard so that or separate bed. We're going to need more bedrooms eventually, whatever. So you're in a different pattern of thinking, right? And not only do these folks say that they don't want anything to do with house prices going down at all, they want house prices to go up. They would prefer if house prices went up the same way they went up for their parents.
I get it. I really do. And I can't blame them in a sense because that's their position. They're in that position. But to them, they're already homeowners. By the time that their 8 and 9-year-old are 25, their mortgage is probably going to be paid off. Yeah. So their children already have that advantage just by the simple fact that their parents are homeowners. That's not everybody's situation. And we're also in a time where even if your parents did are homeowners today, the rates are not at a point where they want to pull money to give you a down payment. We're not at like that. That's not everyone's situation.
No, it's not.
And it's kind of unfair because millennials right now, like I've mentioned this before, we are like the highest educated group right now. Ever, because we were taught that education is going to get us everything in life.
Right, you got student loans. Yeah.
So we've got them student loans, okay? Like my husband's career was 10 grand a year. That wasn't coming from mommy, daddy, you know? So it was like, we are all in this similar situation where we had to do what we had to do because we thought that there was like the promised land at the end.
Yep.
And now that we're there, we're like, oh, damn, we're screwed. Yeah. Like that's not, I get it from their standpoint, but it feels extremely unfair. Because it's like they're at an advantage.
But what I thought was fascinating was the attitude. You know, that the idea was very simple. My parents did spectacularly well in real estate in Southern Ontario. And I want to do spectacularly well.
Yeah, they feel like they're entitled to it. I thought that was going to be my situation too.
Yeah. Well, look, I'm not mad at these people at all. Okay, not even slightly. But at the end of the day, this is a dangerous cycle, that, I bought a house for, $908,775, and I really, really would like to see it at $4 million.
Yeah.
That's a very, very difficult cycle. I mean, particularly when that house is in the far side of Hamilton, like the house is in Grimsby. If the house is in Grimsby and you want to be worth $4 million in 15 years, that's a real issue.
You want the average home in Toronto to be like $3 million.
Where are we going here? Okay.
And they're like tiny homes at $3 million just because it's on like a major street. Jesus, no, thank you.
Jesus, yeah. or they're all going to be those CMHC triplexes, okay? Coach houses and finished basements and everything else. We're going to have that. Anyhow, look, hey, I'm going to touch on this briefly, because it's in the news last week. The record fine for TD Bank, for nearly $4 billion Canadian. The guilty plea. There's never been a bank pleaded guilty for banks. They call it bank secrecy, but really it's more to do with sort of a conspiracy of bribed employees and, of course, money laundering.
Yeah.
So I'll say this. Nobody wants that. Like we all feel in Canada, we're proud of our banks. Generally, we export banks, right? That's like the TD was here long before it was down there.
For sure, yeah.
BMO was here long before it was in Chicago. Okay. By the way, you go to Chicago, you see BMO everywhere. Okay.
Really?
They're all over the place there. And Indiana too, I think. They're in Illinois, Indiana. And RBC. Christ, you see RBC on these famous golfer shirts. Because they have this huge, this huge wealth, system, trading wealth and capital markets operation out of New York.
Even Scotia, I feel like, is everywhere. I found the Scotia Bank in the Dominican.
Oh, if you go to the Caribbean, you're going to see Scotia.
Everywhere.
Yeah. Oh my God. Like Jamaica, it's just everywhere in Jamaica. Wow. Yeah. Barbados, you name it. It's all over. So, yeah. So we should be proud. Canada can still export something, even if it's a bank. Okay. See, we all feel a bit of a hit as a country. So I felt a bit of a hit because mostly I felt bad about the people I know who work at the bank.
Right.
And I know many of them, many executives there. And they don't want this. They were not involved in this. They were not party to this. They have nothing to do. Canadian bankers have nothing to do with the U.S. bank, except at it meets at the C-suite level of the chief executive officer with the chief financial officer, chief risk officer. And the reality is that TD bought a bunch of little banks, started, in states. They went all up and down the eastern seaboard, buying little chains of banks, 10 branches, 100 branches, like 80 branches. And over the last, say, I think it's probably about 15 years. And they're everywhere now. You go to Miami, they're everywhere. You go to New York, TD's everywhere. New York, they built from scratch, though. They didn't buy any banks in New York, New Jersey. They did the incredible feat. And by the way, it's the reason that the outgoing CEO got his job is he helped stand up this huge New York, New Jersey operation from nothing. Nothing. Okay. Like there wasn't a single branch. People said it couldn't be done. They say flat. The U.S. banker said you cannot build a big, strong bank in New York, New Jersey from zero. It'll take you 50 years. Well, in like 13 years, I think they had 10% of the share, which is incredible.
Yeah.
Okay. So, and that's one of the reasons that the guy got the CEO's job. But then this whole thing went to rat shit. And it's somewhat explicable. I mean, you're trying to bring a whole bunch of different bank systems together, trying to grow fast, all that stuff. There's no excuse here. Not making excuses.
Of course.
But at the end of the day, branch employees taking bribes, doing evil, yes, you should have caught it sooner, 100%. But here's what I'll tell you about doing evil. Once people put their mind to it, they're going to fucking do it. Okay, that's my universal experience as an old man. That's what happens. I mean, when you can try to regulate for everything except bad intentions. Okay, if somebody sets out to do evil, chances are they're going to do evil. So shout out to all TD employees in Canada. I know this has been a rough week. By the way, anybody who has money in TD, I got our company money in TD, our money's in TD. I ain't moving it. Okay. Yeah. I'm not doing a damn thing. The Canadian bank is a safe, secure, well-run bank. I know some of the people. It is well-run. I've met the new CEO.
Oh, nice.
Yeah. Ray Chun. Going to be a great guy. So now people in the audience, there's going to be the comments. Ron, you're just a shill for the banks, you fucker. Yeah. You son of a bitch. You shouldn't be pissing up to the banks. Well, here's the deal. Comment people. People making comments. Here's the deal. If I know the people and I come to know they're good people, I'm going to say it. And if you don't like it, you can fuck yourself. Okay? But I'm saying it straight out. Hardworking, capable, intelligent, strong operators of a bank is all I've ever seen out of TD. I've seen it out of all the banks, to be honest with you. RBC are run by absolute crackerjack people. I know some people there, friends of mine. Scotia, we've been dealing with Scotia for going on almost 25 years. Wow. Some of the very finest people at that bank, particularly our experience with the people on the mortgage side, absolutely outstanding. BMO, bunch of great people, solid, quality people. Look, we all get mad at our bank from time to time, right? Is that not a universal truth? Like there's someday you're mad at your bank, right?
For sure, yeah.
But we all keep using the bank, and the bank,
change,
nothing happens to the money. The money's all still fine, okay? Yeah. The credit cards work. I mean, the debit card works. Everything works. You want to trade online, you can do it fast, efficiently, and well, okay? So yeah, we're not gonna kick the hell out of TD.
Canadian banks are fairly safe. Okay.
I believe they are, from my experience, but mostly the people I know are good people working hard who have had a difficult experience going through this.
Yeah, I can imagine.
It's not easy. Nobody in Canada wants to have their ass kicked for something that went on in the United States.
Of course.
But you're going to be fine. Everything's going to be fine. Everybody out there, TD is absolutely fine. And if you think I'm just kissing up to the bank, you can fuck yourself. I don't care what you think. Never have. All right. So we got some interesting questions from the audience this week.
We do. Okay. This one says, could you talk about the comparison to today's market and the market in 89 to 91? That's when there was a slowdown in 1989 and a crash in 1990. I was working construction then, and I had to work any job I could get my hands on.
Yeah, there are similarities. I was there. I was alive. I was an adult.
I was not.
You were not in existence yet, right?
I was born in 96.
There you go. Okay. So I was there. I was an adult working here in Ontario. Some similarities. Yes. The market was way overpriced, hugely overpriced in 88, 86, 7, 88, 89. Holy shit. People were running around doing deals, and lending was actually a little looser back then, believe it or not. Like you could actually do, today you can't do a bridge without having both houses sold firm, right?
Yeah.
Cannot possibly do it. Well, guess what? Back in 88, we assume you're going to sell it. We'll give you a bridge. Go buy it, and we'll give you a bridge, and then when you sell, pay us back. Because the prices had gone up steadily from 86. Everybody just thought it was going on for and big. People were doing the same bullshit they do today, right? They would buy like 6 houses in a row, 6 cheap houses in a row out in back then. Newmarket was but fuck nowhere.
Yeah.
Okay, yeah, it was nowhere. Okay, and people, I gotta buy 6 houses in a row in Newmarket. We're gonna rezoned for like a tiny apartment building. We're gonna make a fortune, and and that all blew up to smithereens. Again, it was terrible. So what happened? So it's strange. Exactly the same thing happened. Bank of Canada raised rates quickly, not even as high as today, not even on the percentage basis, not even as high as today. I think they went from like 5.5 to 7.5, boom, like in
Holy shit.
A couple of months. And the market just collapsed. The same thing as today. All the speculation stuff just blew up, even worse than today. Developers who were developing, like, not so much condos back then. There was very few condos. Condos were the worst hit. Single family went down an average of about 26%. Condos went down 35%. So when you use averages, some of the worst ones went down 50%, 60%. Like it was bad on the condo side. And so there are some similarities. Here's where there are differences. There were few condos back then, very few. Like compared with today, nothing. Okay. Today, we always got to remember for the last 6 or 7 years, condos have been 80%, condo towers, high-rise condos, they've been 80% of all we've been building in Southern Ontario and most of Ontario for the last 7 or 8 years. Okay, so we're all condos now. Yeah. We're 80% condos.
Condo
built.
city.
Condo world. That wasn't true back then. So there wasn't this, and nobody built a 450 square foot condo. Like they were all 2-bedroom, 3-bedroom. All of them were. Hardly anybody built a
older
1-bedroom.
condos. So yeah, we used to have an old condo. It was nice. It was
nice,
big,
nice. Yeah, absolutely.
Spacious.
100%. Nobody dreamt of building
shoeboxes,
dog crate condo. Okay, and never went through anybody's mind.
Yeah.
Wonder what happened. Hey, what happened, guys? Yeah, what happened?
Too many people.
So the differences are. We didn't have as many amateur landlords. There was nowhere near the amateur landlord back then, which is like these 40, 50, 60,000 dog crate condos coming up in the next 2 years. There was nothing like that.
Yeah.
Okay. So the correct answer is there are definite similarities. The slowdown in construction we're probably going to very much feel in the next 2 years, big time feel, could be the same struggle for construction workers. And but will it last as long? The other one, excuse me, prices stayed down. Prices took a big jump down, then trickled down for another 3 years. Like it was just bad price scenario for 4 straight years. And then it just leveled off, quit going down. And then it didn't really start to go up again until 97, 98. Okay,
98 is when my dad bought the first condo.
Yeah. So, I don't know if it's going to be the same. And we didn't have the same level of immigration. Immigration was not the same. So, but are there similarities? Yes. Okay, what's next?
Okay, this is a longer one. This one says, I bought a condo in 2018 for $430,000. It's worth $750,000 today. In 2022, I bought another pre-sale expecting rates to hold. I now work 2 jobs. My first job, I make $40K a year. And my second job, I have a business which grosses $80,000 in a slow economy and approximately $120 to $150 in a stable economy annually. Do you think it's a good idea to have the business take care of the mortgage, not share of the implications if something happens to me and the property is under the business?
Okay, so for first thing, the most important thing to say right off the bat is that if you buy anything with a whole, you can't use an operating company to buy property.
Company, right?
It has to be a holding company.
Yeah.
You have to have a separate holding company. So you're not going to commingle the two of those things. And there's always a personal guarantee and with a holdco, because you're not going to commingle an operating business with a business that just holds real estate. And finally, no, it's, if you got a will, that holdco passes down to whoever you're giving your money to. And it gets, if you don't have a spouse who would immediately get it because she's on the holdco herself, then you would go through your estate. So anyway, I think you get a different set of problems. I think you better make sure you can qualify for the mortgage still.
That resale, yeah.
Based on the incomes you were relating and what you paid for it and how much deposit you gave, you might have an issue qualifying for the mortgage. So my advice is to really start thinking about, how is my mortgage situation going to work out? Like, am I going to be absolutely certain I can get a mortgage on that thing when it's due? I don't know. It sounds 2022. Then I'm thinking maybe 2026, 27. Okay. So yeah, that's the business owning you can't own it with your operating business, but I'm going to think that you've got other priorities right now. Your priorities are to really think hard about, am I going to be able to handle this? Okay. And will I get an approval? Will I get a mortgage? I know it's 2 or 3 years away, but it wouldn't hurt to think about it right now. That's important. So a good piece of news from our regulator, FSRA, a provincial regulator of mortgage brokers. They have effectively outlawed mortgage brokers brokering promissory notes.
Nice.
This goes back to it's like a fraud update. It's our, at least every 2 weeks we have to have a fraud update about what's going on, what evil doings are going on. Yeah. And so in the catastrophic outcome of Claire Drage running out $140 million worth of promissory notes that really just a pinky swear that I'll promise I'll give you the money back. Yeah. And then when she gets in trouble, she hands back her mortgage license, puts all of her companies into receivership, goes personally bankrupt, and leaves the country. So, this is what you call, what do they call it? These are the ultimate bag holders out there are these poor people, because I've probably talked to 12 or 14 of them. These poor people who've lost all their money in these shit promissory notes. The good news is it's outlawed. So it doesn't mean that a mortgage broker can't lend their own money. A mortgage broker can lend their own brokerage's money or their own personal money in a promissory note if they choose. So it's only the mortgage broker who's got at risk. They're the only people at risk of losing their money. But a mortgage broker cannot arrange a promissory note from, here's lender A, who I've sourced, who's willing to give a promissory note, to give a promissory note and give money to, borrower B. That's against the rules now, which is a great thing. Should have been forever, but who would ever dream?
It's a step in the right direction.
Step in the right direction. And listen, there's some more promissory note stories yet to come. I mean, some of them are very small, but unfortunately some of them are out there. So, but no more. Mortgage broker tells you, hey, would you like to give some money to somebody for a promissory note? You look at them and say, you're an illegal fucker. You're against your goddamn regulator. Don't do that. So don't do it. So I was at a meeting where the person was a big investor, a corporate investor in MICs, mortgage investment corporations. These are the companies that do private mortgages. We've talked about it before. There's the banks who are at the top of the food chain, the top lenders, the CMHC-based lenders, the insured-based lenders, huge. They're huge. Credit unions, institutional. And then you go down to the B lenders. Okay, that's like Home Trust, Equitable Bank. Great companies, by the way. We deal with them all the time. Community Trust also, deal with them all the time. Great people. Haven Tree Bank. Bunch of others. Like, if you go across Canada, there's a ton. And by the way, in other parts of Canada, credit unions are huge. There's big ones here too. Meridian's great. Alterna, it'll come to me. Anyway, there's some huge ones. Yeah. Huge ones in other parts of Canada. Coast Capital, Van City out in the West Coast. We got Desjardins. My God, Desjardins completely, they dominate. Desjardins, National Bank, Laurentian, they dominate Quebec mortgages. Like they're huge. They're just absolutely huge. So there are others. But the experience of big banks is that to this day, in this somewhat growing, consistently more difficult economic times, and high interest rates, everybody's getting a renewal. Every renewal that comes in is higher, right? There's no lower renewal.
Yeah.
Well, the bank's default rate, the 90-day, people who haven't paid for 90 days, still fantastically low. You know, it used to be ridiculous low at 16 basis points. Think about that, folks. That's nearly half of a quarter. We're starting to get into like it's a 12th of something, like 2/12 of one. Like it's so 1/6 of 1%. Like we're talking crazy fucking low arrears, defaults, 90-day defaults. And it's not gone up much. It's like, I think it's gone up to 21, 22 basis points, which is still less than a quarter of 1%. That's tiny, okay? But these MICs, this guy was telling me, these MICs, he says, I'm invested in like 3 large MICs, and they're running 10% default.
Wow.
Okay, let me take the contrast there. It's less than a quarter of 1% at the big banks, and it's 10% at these private companies. Okay, like 1 in 10 of their mortgages is in default.
Yikes for the borrowers. Oof.
Well, yikes for the borrowers, because you were 1,000% right. Because the outcome for the borrowers is also the same thing: power sale, and quick, and there's no workout plan, and if they don't sell, if they don't sell, eventually the sheriff shows up and you're evicted. So yeah, it's terrible.
Yikes, man.
Yeah, but that struck me. There's no good reporting on this.
Yeah.
But he says, I'm invested in these companies. He's like an active investor, like big companies who are investing. And he says, oh yeah, they're 10% arrears. So kind of makes sense that these people take on the riskiest possible borrower. So
of course,
sometimes it has a bad result, but we're gonna keep an eye on those numbers. Let me tell you. Okay. Now, one thing. Let me get this one thing out of the way, because Jan, there's all these incredible numbers of mortgage changes coming down the pipe, right?
Yeah.
Like there's the change that goes up to 1.5 million for first-time buyers, and there's this wild change to 2 million for the rental refinance people. And is it 30 years? Is it 25 years? What's the limits? And on and on. All right, let's get clear. Nothing happens at all until December 15th.
Yep.
So you don't even buy a house now thinking you're going to get 30-year amortization. You're not.
No changes.
Okay? As far as we know, you're not. We haven't seen every single rule yet, but we do know that if the documents are dated on the 16th of December, you're good. As long as you qualify, you're good. But folks, this is the simple way to understand it. The only thing that's different today than it was is, if you're buying a new construction home, it's 30-year amortization. That's it. That's all. If you're buying a new build and it's coming on stream right now in the next few months, yes, you can get 30-year amortization. But that's it. Don't ask about anything else. It's not here yet.
They're just excited.
I know. Hell, but just
hold off. Call it a Christmas gift.
That's the most important thing, folks. The only thing that's going on right now is new construction, 30-year amortization for CMHC. That's all we got so far. Be patient. We're months away from the rest. Yeah. Okay. Now, our favorite part of the program.
What the actual fuck?
I got questions.
Yeah.
I got fucking questions for Premier Ford. Okay. Now, we know he ran into this big greenbelt fuckery, right?
Yeah.
And then he had to.
And he got caught.
I don't know if he got caught. Some people got caught. Some people lost their jobs. I think they're creeping back now. But some people lost their jobs. Something kind of weird three-way massage going on in Vegas. Not a three-way, but like
You need to clarify.
like three guys who work in that industry and work for government, and I think it was a deputy minister or maybe a minister, were going for a massage. I don't think it was a group massage, but I think like there was. They all anyway. It was Vegas.
What happens there stays there.
It didn't stay there though. It did not stay there. People found out. Anyway, all of Premier Ford's plans to open up parts of the Greenbelt and get housing built evaporated. He did the usual Doug Ford apology where he shows up. Oh golly, folks! Oh golly! I sure didn't want this to turn out this way, but now it's turned out this way. We're going to cancel everything. It's canceled. So anyway, it's all fixed now. It's canceled and it's over. So nobody look any harder. Okay. So that was what happened. And here's the weird part. So we went out for a drive. We're going to go over a country drive. Wife and I mean, everybody who says you shouldn't be driving, it's carbon. Don't do that. You can all fuck yourselves. Okay. So sometimes occasionally we go for a drive in the country. Look at the scenery, see the colors of the leaves changing. It's the fall in Ontario. Yeah. And so we drive up into Brampton, and we kept hit this part of Brampton, which is just at the edge. It's the edge of Brampton city limits. And there's blocks and blocks and blocks and blocks of townhomes, which are good-looking townhomes, too, by the way.
They're beautiful. They're large townhouses.
Yeah?
Yeah.
Okay.
Yeah.
So... And then blocks and blocks and blocks and blocks, okay? And it used to be farms, okay? But it's on one side of the road of this. And if people want density, there's density, folks. There's a ton of density, okay? They're good-looking townhomes, very newish, look good, nice places to live. And then I glance at the other side of the road. It's a fucking cornfield, okay?
Yep.
Like, what? Wait a second here. Like, how green does this fucking belt need to be, okay? Like, one side of the road is dense townhomes. Other side of the road, corn. Hey, Doug Ford, let's fucking do something. I don't need my corn on the cob that bad, okay? Like, I'll live without that fucking corn. I don't need the canned corn from Green Giant too bad, okay? Like, go to the other side of that fucking road and build us a shit ton of townhomes, please. Nice townhomes that young people can buy, please, Jesus.
4-car garage townhomes.
Wow, that's a beauty, okay? Yeah. Like, come on. You want density? There's density. Everybody should be happy. Just get the fucking other part of Brampton out of the fucking Greenbelt and build those fucking townhouses. Yeah. Premier Ford, wake the fuck up. You can't ignore this Greenbelt thing because, golly, there's got to be houses for people, all right? Build the fucking houses. Get off your ass. Open up some Greenbelt correctly, especially the one where there's a million townhouses on one side and a corn on the other. Fix that now.
Yeah.
All right. See you next week, folks.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.